So very good evening friends. Hope all of you watched the merges video and made full use of it and practice those problems. So now let's quickly take a look at one very important concept, that is giving of guarantee by loan for the loan availed by the subsidiary, and what is the impact of it in Ind AS 109. That is what we are going to see in this. So the actual rate of interest that is bank charged because of the guarantee is only 8%, but otherwise if that is the holding company has not given the guarantee, then in that case 11% will be imposed on the subsidiary company Moon Limited. So the net impact is this 3% for 3 years. So on that, if you apply the present value factor, so that will give you the fair value of the guarantee amount that will be initially recorded. So that will give you amount as 73,320. This is how the flow of the problem will proceed. So now let's quickly take a look at the question and go step by step, so that it will be very handy for you before the exam day. So Sun Limited guarantees rupees 10 lakh loan of subsidiary which bank STDK has provided to Moon for 3 years. So if Sun Limited had not guaranteed, bank would have been, this is what we just saw. And on 31st March 2022, there is 1% probability that Moon may default on the loan in the next 12 months, and on 31st March 2023 there's 3%, the 1% has become 3% now, and blah blah, and the sum goes like that. So provide the accounting treatment of financial guarantee in the books of Sun Limited on initial recognition and in subsequent periods till 31st March 2023. Now let's quickly take a look at till the entry we saw. So the amount, the 73,320 which we just arrived here, where is it? So just first we just got a brief on the financial guarantee concept as per Ind AS 109, because 1 mark will be rewarded for that. So if we do that, the next step will be, so this is what we just saw, the fair value of financial guarantee. So the net interest that is saved is, the present value of the net interest saved will be 73,320. This 30,000 which we just saw, that is nothing but the difference of between the interest that the bank would have been imposed if the guarantee had not been given by the holding company, and the current interest amount that is actually imposed after the giving of guarantee by the holding company to the subsidiary company. This is the concept. So moving on to the next. So the journal entry that you have to pass at initial recognition will be investment in subsidiary to financial guarantee, that will give you 73,320. Now moving on to the year-end entries. So at the end of the reporting period, financial guarantee will be measured at a year of amount of loss or wins, and amount initially recorded less cumulative amortization. So 10,000 or the amount initially recorded, so that will come to, so 73,320 we just saw in the entry that we also passed. So apply the 11%. Be very careful, 11% here and not 8%. So if you do that, 8065, and the benefit provided, that is nothing but 1,10,000 minus 80,000, so that will give you 30,000. So now the closing balance will be 51,385. So 51,385, 10,000, whichever is higher. So which is higher? 15,385 is higher. So that is the amount. And now the carrying amount of the financial guarantee after amortization is 51,385. So after that, now you need to adjust. So the current liability will be the liability is therefore just 15,385. So the financial guarantee to profit or loss, that is nothing but 73,320 minus 21,935. So if you do that, this amount, so the current liability is 15,385. So subsequently you are passing this entry to ensure the amount comes to this. So moving on to the last year. So as on 31st March 2022, and by the way, if you saw till here correctly, then you would have got at least 4 to 5 marks. This question might come for 10 marks most likely, or 7-mark question as well. And 31st March 2023, they might also shrink this problem and ask for 5 marks in question 6. So all the more important. So that is why more focus is required from your side. And on 31st March 2023, so now it is 3% probability. So the initial amount recognized less accumulated amortization is 21,037, and it is lower than 10 lakh into 3%. In the previous case, that is as on 31st March 2022, what we saw was the 10,000 was lesser than 51,327, and in this case that 3% is higher. So financial guarantee to profit or loss 21,385. The carrying amount is nothing but, so if you do that, and this is the The carrying amount at the end of the 31st March 2020 was 15,385. So 51,385 minus 30,000. Now the liability that is to be brought down will be 30,000. So for that the entry to be passed will be financial guarantee to profit or loss, that is 21,385. So if you solve till here, 10 marks will be in your pocket. Hope all of you watched this video, followed me till now, and make full use of it. If you see within 5 minutes we are able to solve it. So if you have that conceptual clarity, you can solve any problem in exam also within the short span. So make full use of it. Keep going. Best wishes.